Markets are falling fast. Is this just another dip or the start of something bigger? Welcome to our S&P 500 roadmap, where we decode the market's next move with precision. In today's breakdown, we'll navigate the S&P 500, Nasdaq, and Russell 2000 through the lenses of Elliott Wave theory and candlestick analysis. Are we facing a short-term shakeout or a multi-month sell-off? We'll map key levels, reversal zones, and the technical traps you need to avoid. This is not the video to miss if you are managing risks or planning your next trade. And let's start with the candles. So this is the daily map, and this is the candles that are right now forming by SPY, Triple Q, DIA, and IWM, which represent respectively S&P 500, Nasdaq, Dow Jones, and Russell. So what we are seeing is yesterday's concern materialized, and today we are seeing a very strong bearish continuation candles. So if they close like this in 4 hours, it will be a big move down. Now let's have a look at the bigger picture that we were concerned a couple of days ago. This is the 5-day frame, which is supposed to close on Monday, the next candle, and so far we are seeing that indices are nowhere near to closing above the necessary line in order to keep the bullish odds. So let's measure it, and let's say for S&P 500 it needs about 4.75% rally in the remaining day on Monday in order to avoid a bearish closure. Well, I would say it's next to impossible. Somewhat similar for Nasdaq. Let's measure it too. So for Nasdaq, it would be even a bigger move, so 6.7%. Let's say it is impossible at this moment, and we are facing a bearish move. But I would like to say that five-day closure is not a concern right now. Let's flip back to the previous chart and have a look at the potential monthly closure. This is the monthly candles, and if they close like this, I would say this is a big bearish reversal and the confirmation of a top on the monthly frame. The same for Nasdaq, and if we look at Dow Jones, so all indices are aligned in this department. And I will say that the worst case scenario is Russell, because it already confirmed this monthly move, almost confirmed last monthly move in the previous months in February, and this one is just the consolidating and a very strong bearish continuation. And by the way, Russell was the first which will likely break the 50 months moving average, the blue line. Well, that's the candles perspective for the indices. Now let's have a look at the sectors. So this is the sectors, and this is the closure for today, the monthly frame. I would say that finance is, if it closes like this, it effectively caps any rally from here, and this would be a hammer which still require confirmation, but the chances for lower for the move lower would be significant. Technology sector is playing bearish, no questions about it. The healthcare is somewhat neutral bearish, but bears are, I think they're gonna win here. Consumer discretionary is bearish. Energy is somewhat neutral. We'll see what kind of candle it forms here. It's still not clear. Utilities have a chance to move higher if they close with 2 dojis, so that's technically it's going to be a foundation for the next move higher. And the staples also are aligned for a bullish engulfing. Industrials, unfortunately, are bearish, and they're about to close below the 50 weeks moving average. Speaking about the large candles, this is the weekly projection. Microsoft, Meta, Amazon, NVDA, Alphabet, and Berkshire are all aligned for bearish closures today on the weekly frame. Apple is kind of neutral, but I think there's gonna be a bearish continuation, especially if we consider this is gonna be the third closure below the 50 weeks moving average. I think that Apple is going to move lower. And those who were thinking that Tesla is about to rally from here, well, they might be disappointed. So this hammer below the 50 weeks moving average is most likely going to be bearish, and the chances for a move lower are significant for Tesla. That's the candle story. Fascinating as usual, and very truthful in general. Let's talk about Elliott Waves. And we start with a short-term perspective, something that we discussed yesterday with our subscribers late night. This is the chart that we posted on our Investing Angles website almost at midnight Pacific time. Well, that was the story here. So we outlined the impulse down with a triangle, and the concern was that this wave A, B, C for wave 2 was a truncation with a diagonal. And this, it looks like this is materializing right now. And this is what the normal rejection and normal reaction to the ending diagonal is on the chart. So we can remove this alternative path. And another concern that this wave is truncated. So the wave 2, wave C didn't advance sufficiently to make it a normal wave. And now we consider it as a truncation. So truncation and the diagonal, they are two like a nuclear scenarios. So now let's make some charting here. So this is wave 1. Potentially this would be wave 2. And now it looks like it is working. The index is working on wave 3. I would expect a little lower here for wave 3. Then we might see wave 4. This is perspective scenario for Monday. I would say that wave 4, and we finally might have wave 5. That's again for most likely for Monday. So once this wave is complete, we will be looking for an extended wave 4, which might take maybe half of the months of April. And after that, we will be looking for another strong move down. Well, let's see how it develops so far. This is our projection, our perspective. Well, that's a short-term perspective. Now let's have a look at the bigger one. This is also something that we discussed yesterday. What we are seeing is the potential for either form in impulse. Impulse is still going to be a valid scenario here because wave 4 didn't overlap with wave 1. And for an impulse, this is a target, the blue rectangle. And obviously, if this is the first impulse, this would be just wave A of a bigger correction. Or the lucky pass, I would say that the index might form a zigzag-ish type, A, B, C here, A, B, and C here. So the wave for wave C, this is the rectangle. The red rectangle is the target. I would say it would go lower towards 5,000 somewhere here. That would be the ideal target for a zigzag. So this might be everything for the correction, and we might end here and continue higher. Let's see how it develops. But in general, if we are looking for very strong bearish closure on the monthly frame and the other frames, I would say that this is just the beginning of something bigger. And especially if we consider technical signals that we discussed multiple times in our daily and weekly reports and videos, and exhaustively in our reports on investingangles.com. Well, that's the midterm perspective, and if we look at the slightly bigger picture, this is what we are looking for. This is the chart that we shared well back in January, and we are saying that there is a chance for S&P 500 to complete a diagonal, and it looks like this hypothesis is materializing right now, and we would be looking for this particular level 5120 as a target for completion of a diagonal. That's the perspective for S&P 500. Now let's take a look at Nasdaq. So Nasdaq is more complex, by the way, and why? Because the top of Nasdaq is not aligned with the top of S&P 500. Nasdaq made its top, nominal top, in the middle of December, and Nasdaq made it in, and the S&P 500 made it in the middle of February. That's why we need to use different counts and different alignments of waves. So this is the perspective. Let me change it to slightly bigger frame. So this is the 12-hour frame right now, what we are looking for, and there are a couple of paths, potential paths. This is something that we shared yesterday with our subscribers, saying that the flag is about to be broken, and it looks like Nasdaq is doing exactly that. So there are a couple of paths on the table right now, and I would start with the most with the lucky one. Let's say we have an ABC correction in purple, and this was the wave 1 here as a leading diagonal. Then we have wave B, and now we are looking for wave C, which will close somewhere here, and this would be an impulse for wave C. Once it happens, once it closes here, we might see a very happy reversal and the continued rally towards all-time high and higher. But this is the lucky path. So far, I would say that this path is not very well supported technically by technical indicators on large frames and also by the candles. So the other two are more probable at this moment, and let's have a look at them. So first of all is the blue path. Considering this was the top, we have wave 1, 2, and now Nasdaq is forming wave 3, which will align technically with wave C of purple, the same target. And if it closes here, then we would be looking for the next wave. If the next wave is impulsive, then we might have a recovery. But if this wave is corrective, then we would be looking for wave 4 and potentially wave 5. And this impulse would be just the very first wave of a much bigger correction, and we will mark it as a wave A. Well, that's the perspective for a blue path, and this is the worst case scenario, by the way. I would say that if we have an impulse down, we might have another impulse in a couple of months. And another scenario, this is the potential truncated top here for alternative B, and it would align with the top of S&P 500. In this case, we might see also a zigzag, typical, similar to what we are seeing for Nasdaq, an ABC here, and this would be wave A of a bigger correction. So after zigzag, we might see a flat and another wave down, and after that, this will be done. Well, that's the perspective for Nasdaq. So somewhat similar to what we are seeing for S&P 500. And I would like to emphasize that the worst case scenario is most likely on the table and has much better probability at the moment, considering technical and candle signal. And the final discussion today is Russell. This is our chart that we shared way back in February 12th, and this chart so far is working flawlessly. What we are seeing here is wave from the top, potential impulse. Let me mark it as a top. So potential impulse 1, 2, 3, 4, 5. wave 1, 2. It could also be wave A and B, but we are tracking the impulse so far because of its clarity. Now we are looking for wave 3, and now potentially this would be wave 5 of 3. If this happens, then we would be looking for another bigger wave 4, which might take maybe even a couple of months, depending, because wave 2 took us what? Let's have a look. This was wave 2. It was 24 days. Well, wave 4 could be even bigger. However, at this point it might be even sharper. Well, we'll see how it develops. So if this wave 2 was a flat, this wave 4 could be a zigzag. Well, and then after that we will be looking for another wave down. Again, the next wave after this wave, the current wave is completed, the next wave character would be extremely important, whether it's corrective or impulsive. And we will go from there. So that's for today, and the indices are speaking. And if you are listening closely, the message is loud and clear. Whether you're a swing trader or long-term investor, the waves and candles don't lie. What's your take? Are we bottoming or just getting started on the downside? Drop your thoughts in the comments. If this roadmap helped bring clarity, smash that like, share it with your trading cycle, and subscribe so you never miss a signal. And a huge, huge, huge thank you to each of our 10,000 subscribers. Your trust fuels our journey. Ready for daily tactical updates on S&P 500, Nasdaq, and Russell? Visit our investingangles.com and join our private Discord led by Master Trader Kyle. Until next time, stay sharp, trade smart, and as always, happy trading.